Let's start with Bitcoin realized market capitalization, the realized cap. What the hell is this and why is it important?
Yeah, so this is kind of a mainstay in a lot of my my slide decks with you guys, and this is just kind of a bigger, kind of broad picture of the Bitcoin market. So that realized cap is just the aggregate, basically, figure of every Bitcoin that's ever moved and the price it was last moved. So you can almost think of it as like an organic price of Bitcoin. And oftentimes during bull cycles, when the Bitcoin price goes parabolic, realized cap will increase with it, but with a lag. Basically because new capital is flowing in to the asset and old coins are distributing. And so basically over the last since about August, we've seen these capital inflows have really started to slow, but in absolute terms, they're still pretty big. I mean, it's about $90 billion of capital inflows since August. And to put that into perspective, the next slide there, if you're looking at the chart in linear terms, that realized cap figure, it's basically since August, we've seen realized cap grow by its entire figure at the top of the 2017 market. That should be labeled 2018, January 2018. It's $90 billion. So in relative terms, we haven't seen really the capital inflows for Bitcoin to be a multi-trillion-dollar asset yet. But in absolute terms, the capital inflows are here and they're continuing to come in. It's just for the time being, it's slowed up a little lackluster in relative terms.
Okay, when you think of this realized market capitalization, can you explain, is this a kind of backwards-looking metric in your opinion, or is it a forward-looking metric in terms of, do you use this to understand what's already happened, or do you use this to try to anticipate something that's going to happen in the future, whether it's price or other types of metrics?
Yeah, that's a great question. I think with realized cap, it's more of a backwards-looking metric, obviously, because you can see just the price at which every coin has ever moved. Realized price is just realized cap divided by circulating supply. Where you can kind of be more forward looking with the metric is if, say, you take a ratio of, and I didn't include it in the slide deck, but that market value to realized value metric I present a lot, it's just a ratio of price to this realized price metric. And oftentimes the lower it goes, currently it's about 1.75. The MVRV ratio below 1 is like a generational buying opportunity. So it's not often that we see it, but that's more of a forward-looking metric when you take a realized or a ratio of these two metrics. And so, on a relative basis, it's a lot more attractive to buy Bitcoin at 40K today than it was at the beginning of last year. So that's more of a forward-looking way of looking at this metric.
Got it. Now we've got the realized price 30-day change, which is basically just taking, the 30-day kind of rolling average and looking at how that's changed over time?
Yeah, so this is just a rate of change, almost a derivative, not to be confused with derivative financial markets, but for any calculus nerds out there, this is just a derivative as a rate of change of this realized price metric. And so you can see, since say August, we've had 90 billion around there of capital inflows. On a relative basis, it hasn't been that much given just the market size of Bitcoin. It's obviously grown a lot since 2017. And so just on a relative basis, just to kind of reiterate, capital inflows are here and they're large, but it's not enough to send Bitcoin parabolic just yet.
Got it. And so then when we go ahead and we look at the 3-month futures annualized rolling basis, when you start thinking about realized price in relationship to futures or other types of more exotic ways people can get exposure, is there a connection between those two things, or do you look at these as kind of separate and distinct types of data points, but it's important to look at them in totality to actually understand what's happening with Bitcoin?
Yeah, I think it's you kind of have to look at all of these things to get a big picture of the market. And the reason I included this chart, and obviously, basically this rolling basis, the spread between that futures price and the spot price of Bitcoin, in this case, the 3-month futures, and then we annualize that out. So say when yields are 20%, really, that basis spread is about 5%, but we annualize that figure out. And so obviously there's a really, really strong correlation here. And basically what it's showing is that while you haven't seen this realized price or this realized cap metric grow a lot, expand a lot in relative terms, this chart is basically telling us that derivative speculation, and mostly by incumbents, whether you want to call them whales or whether it's crypto hedge funds, basically the speculative bid in derivative markets has been basically the largest part of this price action over the last, say, quarter or 2 quarters. Those organic capital flows that we saw at like late 2020, early 2021, again, are here, but it's just not enough to send Bitcoin really parabolic. And when we broke that all-time high and went to 69,000, it was mostly just derivative market speculation. That's been the driving force.
Got it. Now you've got this Bitcoin price weighted by hourly perps funding rate, which is an absolute mouthful to say. Explain what this is, and then why do you think this is so important to pay attention to?
Yeah, so perps is short for perpetual futures. It's another futures market instrument. And basically this is, the perps is the largest derivative contracts in crypto and Bitcoin. And so what you can see here is weighted by the funding rate. It essentially just kind of shows when Bitcoin's a little overheated to the upside or downside, or it's more just kind of flat. It's basically a way to kind of show or to quantify that speculative bid, that speculative premium. So when funding is really high, what that means is that derivatives, that perps price, that contract price is ahead of spot market price. So that's, when that funding rate is very elevated, it's saying that that's the driving force in the Bitcoin market. And, over the summer, we saw the opposite, where that funding rate was below it was a negative funding rate. And so derivatives were driving the price lower than spot. And so that's why we kind of got a big short squeeze. And so it oscillates, and definitely there's kind of a huge sentiment factor here. But that's kind of a lot of the reason why Bitcoin is so volatile, and we see these moves is these derivative markets and understanding the dynamics behind them.